Hi ladies and gentlemen, this is Game of Trades, and this is a technical analysis of natural gas futures, or UGAZ or DGAZ. So we broke the golden support that I've been talking about for weeks now, this 2.55 golden support. It was a 2.5 year support level that we bounced off 1, 2, 3, 4, 5, 6 times, and now we broke through it quite impulsively and with quite a bit of momentum. So there's a few things that I like to say about natural gas. First of all, it is looking extremely bearish. Just from a trend point of view, we are making a series of lower highs and lower lows, with this confirming an additional lower low. So the trend is clearly, and until we see any changes in price action, it is remaining bearish. And this is confirmed by the MACD, which is rolling over at the zero line, confirming the trend is still bearish. You can see I've been saying that for a while. The MACD is above the zero line when the trend is bullish, and below the zero line when the trend is bearish. You can see it is a pretty good predictor at identifying trends. So does this mean that I am all short in natural gas? Absolutely not. I do see a few different points that are quite bullish for me in the technicals in natural gas, which is why I may think this may be a false breakdown and potentially a bear trap, which would give us a nice little rally in the next couple of weeks. Now, obviously, it is quite a risky prediction saying so, seeing the trend, seeing that in the past few weeks we've been trending down non-stop. So yeah, I am going against the trend right now. I am long. I've been long since the 2.55 support, and I'm still currently long until my stop is hit. And now I'm gonna tell you guys why I think this may be a bear trap. And I see a few things. First of all, one of the most important things is the MACD divergence. This potential divergence that hasn't been confirmed yet. You can see the blue line is still under the red one, but we are clearly making lower lows on the price, whilst the MACD is making higher lows. So that is the definition of divergence, and we had divergence here, which led to this nice rally, and we have divergence again. Will it be different? We'll see. And another thing that I don't like about this breakdown is the fact that we are oversold on the RSI, meaning we are overextended to the downside. So those are two factors that tell me we'll see what happens. I'm not exiting my long position just yet. On more downside, I will. But obviously we need a little bit more confirmation before we can be sure natural gas will snap back and go higher. The odds, I'd like to say, are not really in our favor, considering we are below this resistance level, and we are again in a bearish trend. So the odds aren't in our favor, but right now, if I had to choose one side, I see more profit to the upside, potential profit to the upside than to the downside. I don't see this going much lower, at least for now, until we work off these oversolds conditions, I don't think we'll go much lower. So yeah, you know, again, I'm going to say one last time, when you have a breakdown of such a key support level, what you like to see is, what you don't like to see is divergence, and you don't like to see it break it on the oversold level. That's not usually a very good sign of a breakdown or a breakout. So, you know, just keep that in mind. Be careful with this break. It might trap a few traders if this turns out to be a bear trap. And if you don't know what a bear trap is, you know, it squeezes short, so people that are shorting right under this, calling natural gas to go down. Well, when the price snaps back up, they have to cover their shorts, meaning they have to buy back the shares, and the price goes up significantly in a very short amount of time. That is a short squeeze, a bear trap. That's what can happen when you break such an important level with divergence and oversold levels. So, what do I think is the right thing to do? I think we'll see on Monday what happens with natural gas, but I think if we start turning around, a buy signal would come on a break above this 2.55 level. You know, if we start reversing and we break this level, it would definitely um, begin the short squeeze, and it may go very quickly. So you're gonna have to be extremely reactive if this, again, if this is a bear trap. If not, if we continue going lower, I think you know, I have a stomp below, but you know, we have a minor supports under here. I think any move below 2.45 is bad news for the bulls. 2.45 on the futures, you know, just a hair lower, and my stop will be hit. So that's pretty much it for the long trade. You know, you can enter here or on a break above the support level, now resistance level, with a stop at 2.45. So, you know, this is not a very likely trade. Again, I think I give it 50% odds that it plays out in the next few days. But the profit you can make from this level all the way back here, because bear trap would snap back all the way to this resistance level, that would be a 16% profit with very minimal downside. So again, that's not a probable trade, but a high profit trade. So I wouldn't take too much of a big position, but definitely keep in mind all of these divergences and oversold readings. So that's about it on natural gas. I hope you enjoyed the video. If you did, make sure to like and subscribe if you haven't already. In the meantime, good luck, and see you next time.